What's up guys? Welcome back to Money Grow, the channel all about making your money grow. This is the fourth episode of my 100K wheel strategy portfolio. I'm filming this video on Thursday, October 15 after market close, so it's been 24 days since I started trading in this account on September 21st, 2020. And I'm currently up $2,729. That's an average of $113.70 per day, including weekends, which I'm really happy with. Just for fun, if this portfolio were a full-time worker, he would be earning an annualized rate of $20 per hour, 40 hours per week. But of course, like I've said before, I do expect that number to go down as the account gets older. I only made 4 trades since my last episode, which is fewer than usual. The reason for that is that I already had most of my cash balance invested, and I didn't see any attractive opportunities to close out my current positions just yet. I hope to continue this series for a very long time and continue tracking my progress, so there will definitely be a few slow weeks like this one, but regardless, I'm really excited to update you guys on the progress. Before we get started, I just want to give a quick shout out to my amazing Patreon supporters, our standalone Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys want to be notified immediately after I make a trade, please consider supporting the channel on Patreon. I'll have all that information listed on there, linked down below. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 2 free stocks until October 30th, valued up to $1,600 each, and at minimum $8 each, so you're at least getting $16. Make sure to sign up before October 30th to take advantage of that. M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple, Facebook, or many others when you sign up. Links are all in the description. Thank you. So let's jump right back into my portfolio. I started this account with a clean 100K, and you can see I now have a cash balance of $102,729.37. That excess amount is all premium I collected from using the wheel option selling strategy. If you don't know what that is, please watch my explanation video. I explain in very simple terms what it is and how it works. I'll attach a card right here so you can click. This is the spreadsheet that my friend made for me, which helps me track a ton of useful information. I'll leave it on the screen for a few seconds, but please feel free to pause the video if you'd like to look at it more thoroughly. I've also left a link to the basic template of it in the description, so that way you can make a copy of it and download it for your own use. And don't worry, that's completely free. However, if you want access to this exact version that you're seeing on the screen that I update in real time and you have access to those updates, I'm granting viewing access to all my level 8 and up Patreon supporters. So if you're interested in that, consider supporting the channel on Patreon. Thank you so much. Alright, so this is the front page of my Webull account where you can see all my open positions. And again, I'm recording this on Thursday, October 15 after market close. I'm currently using $95,050 of my available cash balance as collateral, which is what I like to see. I will say I did try to open another position with the remaining $7,000 that I had, but it didn't execute. So next week I hope to be closer to a 100% utilization rate. If you guys enjoy this type of content, I would really appreciate it if you like the video and subscribe to the channel. It really helps me out a lot. Thank you guys so much. Let's continue where we left off from the last episode. We're now on update number 38 for my Patreon updates. SCHW, Charles Schwab. In update number 6, I sold 2 puts for $24 each, which was $48 in total premium. And in update 37, which was the last update from last episode, I bought one of these 2 contracts back for just $3. And in this update, I was able to close out that second contract for the same price of $3. I held this particular contract for 18 days and generated a nice 17.03% annualized return on my collateral. Update 39, DIS Disney. In update 26, I sold one put for $193 and I was able to buy it back for $76. I held this contract for only 8 days and generated a really nice 48.53% annualized return on my collateral. Update 40 is WFC Wells Fargo. Wells Fargo reported earnings on the day I sold these 4 puts. I sold 4 $21 strike puts for $41 each, which is $164 total. I took advantage of the drop in their stock price in order to open this position. We can see that their 1-year chart as well as their 5-year chart both show all of their growth basically evaporated. Their stock got cut in half, and that's absolutely due in part to their infamous practices and management, but largely due to their asset cap and the current world situation as well. If you guys didn't know, in 2018, Wells Fargo was penalized by the government for their fake account scandal, and they limited the amount of assets they can hold to $1.95 trillion. Now, don't get me wrong, that's definitely a gigantic number, but the limit itself has prevented the bank from growing, which limits their potential profits. And not only that, but it has affected their stock as well by slicing off almost $200 billion worth of their market cap from their all-time highs. But keep in mind, Wells Fargo definitely is a risky play, and it requires a massive restructuring in order to change the public's perception and eventually allow for the removal of that asset cap. Let's move on and take a look at their financials. Capital structure shows that they have a mountain of cash, thankfully surpassing their mountain of debt, but their market cap is so small that anything under $100 billion is an easy buy in my opinion. Their income statement shows that their total revenue is almost $60 billion, but only $3.18 billion of that is net profit. Once this world situation gets better and the Fed relaxes their asset limitations, I do expect them to generate much more net profit. As far as profitability, they are struggling a lot when it comes to that. If you look at JP Morgan Chase and Bank of America, their net income margin is at around 25%, and their return on equity is over 7%. So just compare that to Wells Fargo. They are suffering. But I like their current price as a risky bet for a nice rebound. Now on to dividends. Don't be tricked by that 7% number. They actually cut their dividend recently, and their forward yield is only around 1.57%. Honestly, that's not terrible, and supposedly the Fed is considering allowing banks to pay out more in dividends and buy back more shares for the rest of the year due to the heightened economic uncertainty. But personally, I'm not banking on that and definitely not viewing this as a dividend play. For valuation, their forward PE is awful at 62. Compared again with JP Morgan Chase and Bank of America, those both have a forward PE near 13. So they're doing way better than Wells Fargo right now as far as forward PE, but just take a look at Wells Fargo current price to book ratio. That's at an amazing 0.6. So we'll see how this play turns out, and I'll also be paying attention to the Fed on its long-term view for their limitations. For our final update, number 41, it's INTC Intel. This one is actually just a quick earnings play since they report earnings next week, Thursday, October 22nd. You can see my expiration date is the day after, October 23rd. I do like Intel at their current prices, and I plan to sell longer dated puts after they report earnings. I love the fact that Intel is so well established and practically dominates their market. They continue to benefit from the constant innovations of the PC and mobile arenas and are always eyeing competitors to acquire. With a staggering market cap over $220 billion, they are definitely a force to be reckoned with. And if we take a look at their stock chart, they're still far from their all-time high, and based on the numbers they're doing, I see them climbing back up to there soon. Capital structure shows that it could be improved with a larger cash buffer and less debt, but it's pretty decent. Their income statement shows a massive $23.6 billion net income, which is what I love to see. Based on that number, their market cap should be much higher. Profitability honestly looks solid by all metrics. I'm really impressed with those numbers. And they're even a great dividend play because of their forward yield of 2.46% and their almost 7% growth rate over the past 5 years, which I expect to continue into the future. Their valuation, in my opinion, is very fair as well. They have a great forward PE with a pretty attractive price currently to enter this stock in today, in my opinion. But of course, for my cash secured puts, I always try to give myself a nice downside buffer, so even if I think the prices are fair, I still want to be protected on the downside. That way, I'm in a much better position if we do suffer another market downturn. So those were all 4 trades that I made since last episode. I really hope you guys enjoyed my 4th portfolio update with a bunch of great trades. And if you guys have any comments, questions, or suggestions, please comment down below. I'll be reading all of them. Remember to follow all of my trades on Patreon and get your free stocks also in the description below. Thank you guys so much for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you guys next time.